Okay, folks, welcome to the Contrarian Trader. This is Robert Desmond. Let's begin with just a synopsis of what we're going to touch upon this evening. The first is going to be the setup on the IWM, how it looks, where do I think it's going. Also, we're going to touch upon symbol, ISIL, Intersil. This is brought to my attention by a fellow member, Eric. The next stock is HMY, which is Harmony Gold Mining Corp. And I'm going to go into these stocks in just a cursory overview now, and I'll be going into further detail with members on the weekly and intraday charts to see where historic support levels are and where we look on the intraday charts. So if you'd like to have access to that, to the premium analysis, please sign up for the 14-day free trial offer on my website, thecontrariantrader.com, and I will get that out to you. Before I get to those two stocks and the Russell 2000 index, I want to talk about Darden. Darden Restaurants today. I'm not going to use the word circumvented because that implies that they did something illegal. They didn't. They acted in the interest of shareholders by managing the impact, the highly predictable impact of Obamacare, which during the debates last week he was so proud to call Obamacare. Bad move. Darden today announced, now this is a company with 180,000 employees based in the U.S. and Canada, but most of those employees are based in the United States. They're going to be exploring making a good portion of their employees, their workforce, part-time to get around Obamacare. What does that mean? That means that you're going to see the U6 unemployment data, which is the real unemployment rate, which is now at 14.7%, you're going to see that go through the roof, especially if Darden is successful, because don't think that every S&P 500 company out there isn't looking at this incubator, this experiment on how to get around the higher cost of healthcare due to Obamacare. So Darden is, although what should have been fairly good news for the stock wasn't taken as such, although it did hold support here at 54.43, it appears like it may want to consolidate and perhaps break out with a potential double bottom setup here. However, before we get all too excited about a stock, we want to take a look at the indicators. And the indicators here, the ultimate oscillator trading below 50 in a downtrend. MACD still negative. Let's take a look at the Dow Jones U.S. Restaurant and Bars Index on a weekly basis. This is not a pretty chart. You had a high back in March of 857.53 on this index. It pulled back in May, consolidated June, July, attempted to rally, failed in July at 806.83. It put in a lower high. Then, after this peak, this failed breakout, this is called a breakout point failure. Here's your resistance line. It attempted to break out, but was rebuffed. Breakout point failure. It then pulled back and broke down below this low here, where you see these bottoming tails at the 50-week moving average. Pulled back, made a lower low. The Dow Jones U.S. Restaurant and Bars Index is in a downtrend. It was confirmed when it broke down below the support level. It rallied, pulled back, then attempted to rally back up again, 802.52, another lower high, and it looks like it's going to break down once again. It could not hold above the 50-period moving average. Not good. After the bell this evening, you had Yum Brands announce that they had better expectations out of China. They beat on earnings. However, revenues fell short. The stock subsequently spiked up to right about here where this blue line is. I think about 68, 69, thereabouts, $68.69. But you can see this is a potential very good short entry point. We're going to watch this one in the morning because this resistance level, 68.69, has proven to be very good resistance in the past. So we can open up a short position on a rally, a short covering rally into this resistance level, then add to that position on a breakdown below today's lows at the, say, 65.90 level. That'll be a confirmation breakdown that this rally would have failed, roll over, and will probably make new lows on Yum. Let's take a look at the weekly chart. Weekly chart is not looking good. It matches up with the overall index, although we did make a slightly higher high this last go around. But it looks like we are going to retest these lows once again, if not break down further. You have your Stokes rolling over. My guess is that we fail and we break down to lower levels. The two stocks that I was asked to take a look at, and I'm going to get into these numbers later on in greater detail, is ISIL. Now, folks, if I open up a trade in Yum Brands, I will be sending out an alert to members. The next stock is ISIL. Before we even get into these stocks, especially since the fact that ISIL is a semiconductor, you want to take a look at the IWM, the Russell 2000 small caps. And the IWM, of which we are short, broke down today and confirmed a new downtrend. Here you have your peak of 86.62, which was seen in early September. You had your breakdown, a rally up to 85.25, which is a lower high. And then today we broke down below the support level. I don't want to get long of anything with the IWM trading where it is right now. We're going to show great discipline before we open up a trade on any small cap. So now let's get to ISIL. ISIL I happen to like a lot. It's got great short interest. I'll be touching upon that with members this evening. Great short interest. The Stokes, very mature RSI, 1425. However, you take a look at this topping tail here, it implies that we are going to see lower lows on ISIL. Volume remains high, although it did put in a lower volume day, but still well above the average daily volume, well above. So it's still not necessarily a buy yet, but again, with members, I'll be going into the intraday charts. Perhaps there's a trade there. And we'll be looking at the monthly charts and weekly charts to see where historic support is. That's where we get our best risk to reward. We want to know where that historic support is because we know there are buyers there. We want to buy when the risk is on our side. Next stock, Harmony Gold, HMY. This stock is not one that I'm definitely going to jump into tomorrow due to the fact that it's just not oversold enough. I want to see this RSI, which I think is going to fail and head lower. You can see the downtrend that the RSI is in. It's already rolling over, making another subsequent lower high. And I think it's going to break down, head well below 30. And for you folks that are out there reading technical analysis for dummies, and you're intent upon buying Harmony Gold just because the RSI just went below 30 because the book says it's oversold, you're going to get burned. That's not the way you use your indicators. You have to use your indicators in conjunction with price and volume action. This price action here is very, very bad. It's not good at all. $8 is resistance. I still don't want it, even though the down volume was relatively light. Harmony Gold is a volatile stock. You have to respect it. And members, again, I will be getting into greater detail on the intraday, weekly, and monthly charts of these two stocks. And for those folks who want to get that analysis, please sign up for the 14-day free trial offer, and I will get that out to you as soon as possible. If you are watching this on YouTube, please sign up for my channel. Leave some comments, negative or positive. That's fine. I always like feedback. I can always do better. Or if you're watching this on my website, thecontrariantrader.com, please enter your email address. Get alerted to when I send out new videos. Okay? Have a great, great trading week, folks. Be careful out there. The market's breaking down as predicted. Have a good evening. Bye-bye.